Hey everyone, Credit Shifu here, and today we are going to be talking about how long it would take you, yes you, to become a millionaire by investing in the stock market. Now we're not talking about any, special strategies like timing the market or day trading or anything like that, just very basic investing in index funds in the S&P 500 and reinvesting your dividends. So let's have a look, first of all, about a couple of people who have done this and have built up incredible fortunes through this kind of method. So in his book, Unshakable, and also in Money Master the Game, Tony Robbins talks about a story of a UPS worker who he was actually a manager in UPS, okay? So when you think of UPS worker, don't think of your sort of UPS guy in brown overalls, right? It's actually a manager. But he never earned more than $14,000 a year, okay? And he actually put a 20% tax on himself, okay? He imagined that there was an additional 20% tax on himself, and he invested that 20% in the market, well, actually in UPS stock, okay, and reinvested all his dividends, and UPS stock grew, incredibly over that time. And when he was around 90 years old or something, he had a fortune of $70 million. So there's a New York Times article about it. The guy's name was Theodore Johnson. Now, there is one thing we have to mention, is that his $14,000 salary, the peak of him working for, this was several decades ago. So it's actually equal to around $120,000 in modern money due to inflation, okay? But still, having a fortune of $70 million by the time he retired is pretty impressive for a salary of only around $100,000 in today's money. Okay, let's look at another example. Sylvia Bloom from Brooklyn, who worked as a receptionist for a law firm. At 92 years old, she had a fortune of $9 million, okay? And so she was working as a receptionist, and receptionist wages, very average, okay? But she, little by little, invested. It was actually because her boss had her buy his stocks for him, and she kind of started mirroring his account and doing what he was doing, and she just gradually invested bits of money, and she was doing the same thing, each month she sort of had an assigned amount that she would put into investments. She actually made $8.2 million charitable donation when she was near the end of her life, which is great. So, what do these two people have in common? Well, they both harness the power,
if you only knew the power,
of something called compound interest. Now, what compound interest is let's say I invest $1,000 at a 7% interest rate. By next year, I'm going to have $1,070 in my bank, okay, capital. But next year, I still have a 7% interest rate, so it's going to be worked out as 7% of 1,070, not 7% of 1,000. And you can see, like this, you get exponential growth over the years. It starts growing faster and faster as time goes on. And this is the thing that people have in common who just put away a bit of money each month, and by the time they've been invested in the market for 30, 40, 50 years, their money is growing at a phenomenal rate. So let's look at a little bit of a breakdown of how you could harness the power of compound interest and how much you could earn and how long it would take you to break through that $1 million mark. So we're going to be looking at someone investing in the S&P 500 in an index fund. The S&P 500 over the years, over the long term, has about a 7% annualized return when you adjust for inflation. We're also going to be reinvesting all our dividends. So adjusted for inflation, both of those, it's going to be 8.5% annualized return. Previously, when I've done similar examples in other videos, I've used a 10% annualized return. That was 7% plus 3% for dividends reinvested. 3% figure for dividends is a little bit high, and it wasn't inflation adjusted, so I've taken that down to 1.5%. It's a lot more realistic. I've looked it up as well, and it's about 8.5% return with dividends reinvested over the long term. So we're going to be looking at an example of someone investing 20% of their earnings, just like that UPS guy did, but if they were earning $50,000 a year. Now, 20% might be a bit unrealistic if you're only on $50,000 a year. So, you could imagine someone earning $70,000, $80,000 a year. They could also realistically invest $10,000 a year, okay? You wouldn't need to be earning over $100,000 to be investing $10,000 a year. So this is definitely something a person, not someone straight out of college, but someone who's been working for a few years, they could realistically invest $10,000 a year. So you invest $10,000 a year at 8.5% return, okay, in the S&P 500, reinvesting dividends. To pass the $1 million mark, it's going to take you 26 years. To get to 2 million, it's going to take a shorter period of time. It's only going to take 34 years, okay? 8 years from the previous $1 million mark. So it took you 26 to get to your first million, and then only 8 years to get to your second million, because the growth is exponential. It's an exponential curve, goes up steeper and steeper like this. So, you know, that's like over three times less time it takes you to get to your next million. Okay, what about your next million after that, to get to the 3 million mark? It's actually going to take you only 5 more years to get to your 3 million mark. Okay, so 39 years total invested in the market, 5 years since the previous milestone. And to get to $4 million, to pass the $4 million mark, it's only going to take you 3 more years. 42 years total invested in the market and 3 years since your previous milestone. So by that, you can imagine, you know, someone who started investing, let's say at, 25 years old, okay? So to be invested in the market for 40 years, so 35, 45, 55, 65. So pretty much almost retirement age, okay? 40 years invested in the market, and they started investing at 25. Their money is going to be growing at a phenomenal rate. If they are doing the 10,000 a year, their money is going to be growing at around 3 years, $1 million every 3 years. And that is phenomenal. So the reason why, you know, they didn't make that much money while they were working. In the stock market also, they didn't make much money while they were working. But after these people retired, because they had already been in the market so long, over around 40 years, their money started growing at a phenomenal rate once they'd retired, around 3 years for $1 million, and then, you know, down to 2 years. Eventually they were getting $1 million a year, and then $1 million every 6 months, and just growing like that at a phenomenal rate. So what can we learn from this, guys? Well, it's to get into the market as early as possible. And you don't have to have that much money to do it. I mean, there's free trading apps like Robinhood. I personally don't use them. I go with something that charges a commission because I want all the features that come with that. But if you have just a little bit of money, say a couple of $100, you want to get into the market, you could use Robinhood. If you have $1,000, you could open an account at Charles Schwab. That's their minimum for opening an account. There's also other brokers like TD Ameritrade, all these kinds. You know, this isn't sponsored, but those are kind of your options. And yeah, just get into the market. Don't go and bet on, you know, small companies that you think are going to explode, but just do something steady. Invest in the S&P 500, reinvest your dividends, you know, in an index fund, reinvest your dividends, and just wait. And by the time you retire, if you really have been adding to it every year, I recommend adding $10,000 a year. But even if you can't do that, your money is still going to grow exponentially, and however much you put in, you know, the more you put in, the more you'll get out of it. There's actually an online compound interest calculator that I use to work out the figures for this video. I'll put the link in the description below so you guys can enter your own figures and see how much money you could make investing in the market. Also, if you want to hear the full story of Sylvia Bloom, Graham Stephan did a video talking about her story. I'll put a link to that on the end card of this video. You can go and check that out. Let him know Credit Shifu sent you over there. And guys, please subscribe for more videos like this. We will see you next time with more credit card and personal finance tips and tricks. Bye-bye.